What's up, YouTube? Welcome back. Today we're just going to talk about mindset real quick, actually. I'm going to get a little bit bigger here on screen. Uh, Actually, at the time I'm recording this, I had a couple people ask me, like, hey, I noticed you only talk about green trades, or not only just why talk about green trades? And in a lot of my streams, I do talk about green trades and how I manage things. And then someone even asked me, like, hey, you bought, at the time, I want to say it maybe it was July 13th. It was one of these. I literally bought puts at the bottom for August 19th. I even said I'm rocking these things at least until the 1st. That's where things will be managed. They said, how did you navigate that? And so, like, just the fact that even two people asked that, I get a lot of people don't pay attention to everything, but you kind of have to. One person even said, I just skip around. I only watch like one part. I break down different tickers and all that because, yeah, it's cool to trade those and maybe do take trades based off like the zones I have drawn. But there's a lot of mindset that is the same. Like, there's technical analysis, but anybody can draw a triangle. If you had one of those red and blue balls with the yellow shapes and you can pass that, you could probably do technical analysis. But you might find your execution just isn't really there. There's the psychology behind it that really does improve your execution. And I do have red trades. I even talked about this. Now, granted, I do talk about it more in my mentorship chat because I do, I comment in there so they can see what I did. But even then, like, the only way I can even make a video talking about how I navigated that red trade is specifically just on this particular one, because there's not a lot of navigating. There's not a lot of managing red trades. That's not a thing, but it's finally clicking. A lot of people think that there is. I even had a video on how to, you buy a call, but you sell a different call, turning it into a spread. Again, how to manage a green trade. I had people trying to do that to manage a red trade. Like, your mindset is off, it's backwards. And that might be exactly why, I don't want to say I'm better. There's a word there for this. My focus is in the right spot. Because the short and sweet of how to manage a red trade, there is no management for me. Like, when I buy it, it's either red or it's not. There is no management. I can't say that enough, because some of you guys you're probably buying more than you should, thinking, I'll manage this if things turn against me. You have this mentality of, I'll buy and I'll only sell when it's green. And you probably catch a few surprises and you're wondering why your account is down. Where I buy, the only management I have is in the green. Like, all right, I bought. Now, I hope everything goes to $1 million. So far, it hasn't. I hope every trade goes to 100,000, not just AMC. It hasn't. Therefore, I do have to manage it in between and trail things, because that's where management. I'm trying to maximize profits. Everything I have is built into the entry, the execution. My risk is managed from the get-go. If you're brand new, by the way, if you haven't seen any of my videos, click on the playlist, how I trade, because you need to watch, I forget the title on this channel. On the Don Franz Show, it's called 1% Stop Loss the Correct Way. It's in the playlist I have on this one, how to trade. I think it's how I enter a stock or how I buy stocks. Just watch all of them, okay? You need to. When someone says, hey, how did you navigate that red trade? Like, I want to say, well, I pulled my phone out of my pocket. I took the trade. Then I saw it later. It was red. I navigated that phone back to my pocket. And that's that. I took the loss, took the L, and moved on. I'm already on to the next trade. There's no sense in focusing on that trade. It's already red. I don't have to worry about it because my execution was in the entry. The reason I bought, how much I bought, why I bought, all of that was ever before I ever clicked the buy button. So my management is long before, where you guys are trying to manage after. There is no management after. It's a red trade. Like, full stop. That's it. If there was any fairy dust, any magic I could tell you, I'd have that video out. We'd probably all just be millionaires. Or it would just be exploited from other banks and used against you. If your management in the red is after, you're doing it wrong. You didn't pick up on the streams where I tell you guys, worry about the entry. What's it in real estate? You make money on the buy, not the sell. It's how I bought, why I bought, how much. if you don't know what you're doing, a lot of people will just, they throw out this arbitrary number like, I took $3,000. I'm gonna add another 3,000, and then I'm gonna add another 3,000. That's my max position. They're just throwing numbers out there. Like maybe that works as investing if you want a dollar cost average, but you want to keep everything weighted to a certain amount. But when I'm talking about trading, that's not how it works. You can't just throw it at the wall and see what sticks. When I buy something, I imagine every red scenario, including the world just caught on fire. So yeah, I know things can gap down. What are the likelihood? It's not likely, so maybe I rolled the dice a little bit there, considering if things were to catch on fire and I'm, naked something, that could potentially hurt. Could things gap down considerably off a tweet, a new bill, something? Yeah, there's a lot of time after hours, overnight, the next morning for something like that to happen. That's in every one of my swing trades. But then there's just the normal like day-to-day movement between small to medium. We could do nothing. We could get some kind of tweet that moves at a decent amount. Not full-blown panic mode. All that's priced in. So my risk built into the trade. If I buy a put, I have an idea of how much I'm risking. Now, when Amazon was like the one that kind of went outside this, because those were like $15,000 contracts. I know if that gaps over the next morning and something weird happens, that's a $7,000 loss. So if I'm in 2 contracts, I'm ready. I'm hoping not, but ready to probably at least take $15,000 loss because it just gets cut in half. Like for earnings plays, I'll assume that. But everything else, now that is where I'll try to salvage the contract. I'll just sell it for whatever's left and then get out. That's management, I suppose. But even then, I had all of that in my head before I ever clicked the buy button. You're gonna notice a pattern. Everything I do is before I click the buy button. Everything, if this is news to you, everything you do is after. It's already too late. There's no, again, we're not in fairy tale land. It's not magic. Where else is going? Everything else is built into the trade. So I use spreads. Spreads have a max loss. It doesn't matter if that thing gaps to 0, right? I in that case, you're long and short one, so they will cancel each other out after a certain amount. There's shares. I have my stop amount. My share count is built into that. Now that's still assuming we gap down. I like risking $2,000 per trade, but yes, if it goes to 4, I'm not dying. I can still keep the lights on. No one wants to lose that. I don't even want to lose anything. I want all my trades to be green. The thing is they're not. But I am still mentally prepared for it to gap down well below my stop. And then I'm in what's called management mode. And I have a video on that. How did I manage that loss? The next morning I waited for the volatility to end and then no new lows. I just trailed it up until it tagged out. So I guess I can manage that trade. The only management that went into this one, if you can even call that, it was probably more a denial phase. So we're talking about SPY right here. I can't remember which one of these it was, but I gave it plenty of time. It was right here. Yeah, I got excited right here. Okay, so I bought August 19th, 385 puts on SPY. Thinking we're good. Now the market's not looking too good. That's looking like we're just putting in another lower high. We're headed south. My whole trade made sense. Let's go. Now I'm prepared to go into the red. Right, I didn't whole account this because, well, you'll see why. But yeah, green days could happen. What if that's a higher low? That's still a zone. I arguably do it. Like if you do this, you probably won't be profitable. I literally bought puts. I shorted that at the type 2 where someone should be buying to go long. But the overall bigger picture trend was still down, so that's the trade I took. I was short, put my money where my mouth is, went short. Now, I gave it plenty of time because I didn't want to get stopped out off a couple of green days, which we did see, right? So it popped up. Things got weird. Inflation's still high. We're still talking about recessions at this time. Green. The whole week was green. Stupid. Now, the original trade I took is an L. Done. It was 5 contracts. Toast. Like, yeah, they're red. The management in between, I wouldn't even call management. I would just say it's multiple trades of the same contract. Because I went from 5. Now, eventually I had 20. Because I'd go from 5, and then we jumped up to here, and I grabbed another 5 more. So I'm 10 down. So it did bring my average down. Now they're green. Now I did lock some in. Did the same again. 5. And then it was like 15 up here, which dropped it down, which dropped it back to 10. Into the original 15, I think, again. We're not on the first yet. somewhere in here, the grand total was 20. Now, as it was climbing up, I'm grabbing more, bringing it back down. I'm locking in some profits. If you're in my mentorship chat, I was telling you guys I was hedging this with futures. So while my puts are going down, I'm in futures contracts, long going up. That was intraday. I caught a couple of good moves, but a couple of days it just tagged out, and I didn't want to get back in, you know. The thing is with hedging is you for sure lock in a loser, no matter what. So you're just trying to like save face. Everything about my execution on this was just silly. I gave it plenty of time. That was my excuse. But I also grabbed a little bit more than my normal risk because I was hedging and doing this. If you're not at that level, I don't even like doing that. It's very rare that I even do that because it really is kind of dumb. Looking back, the whole thing was stupid. It was definitely a loss, so there's nothing to talk about. The whole trade was I went short here, and then it turned around, L. That's it. We're on to the next trade. You know, right now above that, we're bullish and things are doing, you know, just fine. Again, there's no management in red. It's just you took the red. Move on. Spend your time managing the green trades, not the red ones. The reds are done. When you're in the trade, there's one of two options. You need to manage that to maximize profits or take the L. Those are the only two outcomes. There's no, I can recover this. I can do this if I do that. You know, if I'm going to add on, it's still because I made that plan before I ever clicked the buy button. You hear me say I took a type 1 and a type 2. So it hits this type 1, and then I added on type 2. That's very different from probably, if you're brand new to my channel, your style of adding on is probably because you bought it, assuming you're going to sell green. That didn't pan out. It's red. So you're going to buy some more to bring your average down because you're sure it's probably oversold. You probably, maybe you think you were a day early. Like, you probably have a list of excuses as to why you were right and the market is wrong. So you just add it on for the sake of it. And all you're doing is literally just throwing money into a fire. Just saying, that's cool, but I can burn more. I can afford it, you know. Largely not a profitable way to trade. And if you're, again, I'm going to wrap it up because I don't want to just keep talking in circles. Red trades happen. I don't specifically only talk about green trades because, you know, that brings in a bunch of kids with stupid expectations. Like, they think in their $200 account they'll make what I've been making for doing this almost 10 years. So that's why I don't like to post profits. But all my management is in green trades because that's the only thing that needs to be managed. Red is just red. That's it. If your girlfriend's cheating nonstop, you don't just manage a crappy relationship, kick her to the curb, and you move on to the next one. And some of you guys, I just described your whole relationship, like your life of girlfriends and the stock market. And do you see this resemblance now? Boot 'em. On to the next one. Find the better one. Quit wasting your time on the one that doesn't care about you. Clearly you were wrong when you made that decision, so it's time to move on. So, anyway, I'll wrap it up here. I will see you guys. I'll see you guys in the next video.